Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Unity software, ticker symbol U. And so here I am recording this on Saturday morning, September 21st, after Unity closed on September 20th at a price of $20.81, being up about 2.5% on the day and staying up in the after hours. And so, yeah, I want to go over the chart because, it's been a little while since I did the last video. I think the last one came out on August 28th, and some things played out pretty perfectly, but, not exactly perfectly. So, I just kind of wanted to go over some of those things where I think Unity could be going, both to the upside and the downside, just managing risk. And then also wanted to get into some options data because, as I'm sure you guys are aware, in the video, I had an alert set at $15 a share. I then adjusted that to $15.50 and we didn't pull back to 1550. We found a bottom at the 50% level here, right around $16 a share, forming the right shoulder of this inverse head and shoulders pattern that I suggested might be happening in the last video when price was right around, just below $17 a share. I believe that video closed at a price of $16.87. It was recorded during trading on the 28th. And so from there, we did get a pullback as I suggested. We did go up as I suggested. Numbers weren't exactly right, but yeah, so, I just wanted to go over that. And this video is probably going to be a little more casual than the other ones just because I wanted to dive into some of the data and kind of analyze my analysis. And so in that last video, I did point out this neckline for this inverse head and shoulders, and following the 28th, we did get a bounce and a rejection from that neckline. So a pretty weird right shoulder here, given that it formed a W and kind of had like a double test of the neckline, having hit a high on September 3rd of 1817. So that would have been, a very good time to trim before this pullback to the 50% retracement. But, like I said, I was waiting for 1550. Because the 618, if I zoom in here, we can see this a little better. The 618 down to the 65% retracement, that's the golden pocket. That ranges from 1536 up to 1546. And then also have this yellow line that kind of mapped the double bottom over here of that left shoulder at 1538. Those levels were not hit, so it sucks. I was waiting for that, and that's kind of, the reason why I wanted to get into some of the options data here, just because, I didn't get to buy shares down here, so what's a way that I can make some money on the volatility? And that's with options, which are definitely very risky, but I've been getting more familiar with them, learning more with unusual whales, and applying what I'm learning to trading options. So yeah, I just wanted to go over some of that data. But from the last video that I put out, price was right around 1688 where I have the cursor here. I believe that video closed at 1687. You'll have to let me know if that's right. I did just watch it in preparing for this. But in that video on that thumbnail, I did have a pullback of 10% or right around there on the thumbnail. And we actually pulled back to around 7% downside, hitting a low on September 6th of 1569. So kind of funny how that number pops up, 69. We like it, and that was the bottom there. And then from that, or really from that last video that I put out, we went up to the neckline, going up about 6%, and now currently trading about 23% to the upside. So, that's right around 30% I, have on that thumbnail of that video. And so, from here, I do think that price will go higher, but, I think that it might be bumping into some resistance as with this retracement going from the high hit on December 27th of 2023, coming down to the low of 1390, which was hit on August 7th. Got that 236 at a price of 2091. We are bumping into that. Does seem like there's some resistance there. And also that is the midpoint of this channel that I've drawn going back all the way to May of 2022, price has resided more or less in this channel, which I believe it's calculated by one standard deviation of the price variation in that range. And so, if we do two standard deviations, all of that would be capsulated in it. But that is really just to show that there is a trend. It has been downtrending, and we were getting close to testing the bottom of that channel. And from that low, just doing another measurement, getting up to the top of that channel, that could definitely represent a more than 100% swing to the upside. But from current price, actually, before I zoom in, don't want to get ahead of myself. From current price, that could represent about a 60% swing to the upside if we do get up to the top of that channel, if it goes basically straight up to the top of it. But it could, also break higher than it. It will likely take longer than, a couple weeks or, however many days it was that I drew that box to get up there. I think it could take months to get up there, and in that time frame, we will be seeing ups and downs. So I think there's a lot of volatility to be taking advantage of with this. And so, just looking at the chart here, the thing that stands out to me with what we're currently forming, having hit a high of 2118 on Friday, so on the 20th, just yesterday, as I am recording this on the 21st, 2118. And, it might seem a little bit discouraging, getting a little antsy that we are below 2090, that 236. And we are below, the midpoint of that channel. But this to me looks like it's a bull flag, and that's not only supported by, what we're seeing in the chart, a big move to the upside followed by consolidation. There's been a lot of exciting options activity, which does suggest price could be going higher. So I did want to go over that, as I had mentioned multiple times. So I will very soon. But yeah, I just wanted to basically, this measured move that we would have from the base of this head to the neckline. If I take that to where we broke out, as I went over in the last video, that would be bringing price up to around $22.20, give or take, right around $22. We're currently below there. So, I do think that there is some upside potential, but I also do think there is some risk if in case this is not a bull flag and we do break to the downside. Where could we go? And so I could see this pulling back to retest that neckline, retracing to the scene of the crime where it broke out, could come back there. And so that would represent from current price a downside move of about 15%, just being approximate there. And it doesn't necessarily have to go down to that level, which would be around, $18 a share. So I do think it is good to be prepared for that, to have a plan if that does happen. And with that being said, just drawing lines from these other retracements that I've done, I am just going to add the 0% on here so we can see that was at 1806. So, maybe that is a good level to be considering that price might pull back to. Maybe that's a good dip buy, preparing for a bounce, a continuation to the upside. Also, the highs over here, I'm really just going to go to this higher pivot high. That was at 1856, so I will mark a line there as well. Those are just some levels that we possibly could be pulling back to, so good to have a plan if we do retrace to them. But I can also do some other retracements, and since we did get higher here than we did when we hit this initial top here, I'm going to do a retracement from the top there to the bottom, and I am just going to add in some levels to that so we can get a better picture of what's going on. And so, all of these levels to the downside, I just really wanted to make sure that 1817 is correct there. And so I'm actually just going to omit all of these levels because I want to see a level to the upside that might correspond with where price is at or where price has been. Does look like we broke above the 1618, which was at a price of 1970. I think it's good that we're holding above that level. So hopefully we can be continuing to get closes above 1970. And then the next level that I will add here is the 2618. That is right around 2218. So, I did omit it from the chart here, but that measured move that I had went up to 2219. So, multiple levels lining up here. It seems pretty convincing, seems pretty compelling that we could be getting a move to the upside, as long as we are holding 1970 as a floor. But really, I don't see 1970 as being the game-changing level. The level that I see as the game changer is the low that was hit on September 16th. That was at a price of 1923. So, got that marked there. And I am just going to color that line orange and make it a little bit thicker so we can see it a little bit better. But yeah, so 1923, really do not want to be seeing any closes below that. If we do, I think price could be coming down to $18.50, if not $18 a share, and then reevaluate, see if that's holding up as support, the neckline holding up as support, and then maybe we get a continuation to the upside. But, considering that I do think this is a bull flag, I do think 1970 is going to hold, and I do think price will be going up to $22 in the coming weeks and or months. I think we should take a look over at the options table just to have a quick look and get some ideas for some contracts that might be of interest to trade. As I think bigger picture, the price will be going beyond $22 a share. I think it could be getting up to around $33 a share, $32 to $33 a share, which I do have marked here as the golden pocket from this retracement. So that's the 618 up to the 65% retracement levels corresponding with the top of that channel over here. But anyways, let's look into some options data to see if there are some contracts that might be of interest. And the reason why I am, getting into the options with this is largely because of the Bronx Viking on Twitter or on X. So definitely check him out if you're interested. Also, Colin Gladman. They have both been really informative as far as options data goes and as far as tracking stocks, and they have been following you recently. So I'd recommend following them, as this tweet really got me into thinking more about doing a follow-up video on Unity software, and also because I did get a request to follow up on it, so happy to do that. And so here in this tweet I said, I was asked to follow up on my Unity software video, which I will do after close either today or tomorrow. So tomorrow is today. And, picking up a call might be of interest before close, though. And so that is one thing that I did do. I picked up a contract, which I'll share in a minute, but I actually sold it. What I've been doing with options contracts is I have been swinging them for 20% profit. I just don't want to be diamond handing them, holding them until expiration, and then they expire worthless. I have been looking up contracts to swing. And so that's what I'm going to do here using Unusual Whales, just so you guys kind of get a taste of it. I'm just here in the options data doing the contract lookup. And, these are some contracts I've either been interested in or been holding. And so, I'm just going to go here, type in U there, so I get the Unity software contracts. I do have a couple in the list on the left that I did pull out. One of them is the $22 strike for expiration on October 18th. So that's the next month's options contract. That's the one that I actually swung for a 20% profit on Friday, which I'll probably re-enter on Monday, but I'm going to see what it's doing in the pre-market Monday before doing that. And then here, there's also the $20 strike with an expiration of November 15th, so the monthly expiration there. Those two stood out to me as being most interesting, but these are the ones that do pop up in the search here. So I wanted to go over why I didn't include some of them and some others that might be of interest for us to look at. And so the first one is the $30 strike, and that is for the October 18th expiration. The reason why I didn't put that one on the list in the left is because I don't see the price going up to $30 a share by October 18th. So I feel like that's pretty risky. That would be just to swing it for premium. So, maybe I'll add it on the list just to consider so we can go over some of the data, but I do not see price going up that high. And so, I don't think that's a good contract to swing. But, maybe it's good for in and out as the contract price is going to be cheaper. It's just that theta decay is going to be a lot more. The value of those contracts are going to decrease much faster than the other ones because price is not near $30 a share. And I think it's going to take months before it gets there, not 1 month. Other contracts, so I got the $20 November 15th. I've got that on the list already, so we can explore that. This one expires in January 17th, so that's months away. $20 strike. It's probably going to be really expensive. I guess I'll add it just so we can look at that one. And then let's see, also the $23 strike. I could see price getting up to 23 or at least getting pretty close to it. So I do think there's some value in that. So we could look at that contract as well. And then let's see here. This is 21. This is already expired, so not going to look at that one. As I am already recording this on the 21st, this expired yesterday, so not really of use. $25 strike for, I guess if we're doing the 30 strike, I might as well look at that one as well. And then coming down, this one, it's too soon. I don't like contracts that expire, within 1 to 2 weeks of buying them. I just think it's a little risky. I like to look a month out. And then 22 for October 18th. That one does stand out to me as being really good. So, I'm not going to continue going down this list. I'll just kind of get into the contracts over here on the left and kind of go, working our way down. So this is the contract that I did swing, and I think I'm actually going to minimize that so we have a better view here. And so looking at this contract, what I did, and maybe I'm going to regret it, but I swung this contract, buying a contract at $1. So that's $100 per contract, and I swung it up to $1.20, so I made 20% on it. This is one that I'd be interested in buying back when the market opens, as I do think we could be seeing a little bit of a pullback starting on Monday, and I'm actually just going to switch this over to the hour time frame. So, I do think that this could be pulling back some, and that could be, offering some discounted opportunities for these contracts. And so, this is one that, I would consider buying back at $1 a contract and then swinging again up to 120, or maybe I'd want to go a little bit higher, 130, 30% swing on that. And for me personally, I just do individual contracts and I try to swing them in and out either over the course of a day or a couple days. I just don't want to be holding them until expiration, which for this one is October 18th. And so anyways, this one going from $1 up to 120 seemed to work well. And also over the course of the day trading on Friday, that's what this is. It's showing the 1-day time frame. We can see that the value was a lot lower earlier. And then when it came up to $1, there was a nice swing up to this looks like it went up to 125, so that's a 25% swing, and then it pulled back to around $1. This is where I got my fill, just one contract, so not a big deal, and then I swung that up to 120. So with contracts, this could probably go up much higher than 120, but I view contracts as being really nice to swing. So, at $1, sell it at 120, buy back at $1, sell at 120, rinse and repeat. That's kind of how I like to do it. But, I want to do it as long as the momentum still looks like it's moving with this one. And I do think it is. Anyways, on to the next contract, $23 strike, expiring October 18th. This one actually doesn't look as appealing. It's had some sells here. Oh, and I guess I should mention this over here. It does look like, the open interest for the contract that I was talking about, the $22 strike. The open interest is around 8,000. Volume traded on Friday was about 4,000. And so the difference from the 19th to the 20th was a loss, but the volume is going to increase. It will show an increase on the 23rd on Monday because of these 4,000 contracts. More than half of them were on the ask side or on the buy side, whereas less than half were on the bid or sell side. So, I think that looks good, but it could look better. But yeah, just something to consider. The $23 strike, like I said, not looking too great there. The volume traded was almost 9,000 with the open interest of about 3,000. The majority of the contracts were on the sell side. So this one seems to be pretty risky, or at least that people are, taking their gains or taking their profits. Although they sold down here and the price, the value of the contracts went up. So that was kind of like a bad sell there. But, people protecting their gains, their profits. So, it does make sense. Going back to the 22 one, I just wanted to see that, the open interest, 8,000, volume, 4,000. With this one, open interest, 3,000, so not as much. And, but, a lot of volume traded, but that is offloading those shares, offloading those contracts. So, not looking too bullish there. Then looking on the $25 strike, again, a lot of contracts being sold versus being bought. And this does have an open interest of about 7,000, but I do think, about half of those, a couple thousand were offloaded, basically the difference in these, assuming that these are sells, these are buys. And so considering that, this one also seems to be pretty risky. I don't really think this looks like a good one. The premium is, $60 a contract or 60 cents per contract. And so, you know, um, maybe this is of interest. For me, not personally. $30 strike, I don't see it going up to here, but it does look like there was, double the amount on the buy side, on the ask side, as far as the volume goes. Almost 35,000 contracts versus 18,000 on the bid side. So a lot of bullish sentiment there. And so the open interest was about 8,000 and volume. So this is pretty insane that, this contract, well, I don't think this is the best contract because I don't see price going up to $30 a share just yet, not by the 18th of October. But so I think that this, is justification for these other contracts that have a lower strike. If people are betting on price going towards 30, it's definitely going to be going towards 25, 23, and 22. And so, yeah, I mean, this is just like a massive amount of volume. I'm actually shocked to see that, taken aback by that's really, really bullish. And so, over a million, almost 1.4 million traded in premium on Friday, with the majority of that being bullish. So that is pretty insane. So yeah, maybe this is a contract to swing. If it closed around 30, maybe it dips down to 20 again, or maybe 25, and then there's a nice swing to the upside, going back to 30, 40, whatever it is. But yeah, that seems pretty crazy. I must say, very, very bullish. I don't really know what to say about that. So yeah, very bullish. Looks really good here. These other contracts, let's see, this is the $20 strike expiring November 15th. This had, about 3/4 of the volume traded was on the ask side versus the bid side. So that's looking pretty good. These contracts, though, because they're further dated out and they are in the money, they're pretty pricey. They're like $3 a contract, which translates to about $300 a contract. Pretty pricey. And, I think that they will go further in the money, but I'm not really looking to buy 100 shares at $20. I'm just looking to swing contracts. But, maybe this is, the kind of contract you're interested in. But yeah, $300, that's pretty pricey for a contract that could, go to zero. Always risk with that. And then this other contract, let's see here, the $20 strike, and that's for January 17th. That has had, twice as much volume on the ask side versus the bid side. And, contracts here are about $370 a contract, or $371 was that average fill. And, let's see, open interest was 4,000. Now it looks like it's going up a lot. This one actually seems like a better risk to reward than the November 15th one, just because it's still, hundreds of dollars per contract, only $70 more than the one that expire in November, but there's just more wiggle room with that other one, given that there's a couple extra months, December and January. So I think that that's a little bit more appealing than this one. I should note, though, open interest, 1,700 here, then going up to, like 23, almost 23,000 in the volume. But again, about 3/4 of that volume being on the ask side. So yeah, I mean, I personally am just, as I mentioned, blown away by this. So maybe this is a good one to swing. Maybe swing that from 30 up to 40 cents if it doesn't gap up on Monday, which there is some risk there with that. But like I said, I definitely think price could be coming up to $22 a share by October 18th. So this one seems pretty reasonable while risking, $100 per contract or right around there. I think that this could be closing in the money. So I think that there's relatively less risk in this going to zero. And before I close the video, what I should do, I'm just going to switch back over to the daily time frame here, with that $22.18 marked up there. What I'm going to do is I'm going to look at the options table here so we can look at some of those contracts here with October 18th, looking at calls. We can see the $22 strike. To buy a contract is at $1.20. And so that is what I sold my contract at. To sell up one of these contracts at right now, that would be at a price of $1.10. So, I took some profits before it pulled back, but it might be tough for me to buy one of those contracts at $1 again, or $100 per contract. And so, that is something to consider with this one. And then looking at the other contracts, this one does look like a buy for the $23 strike is 98 cents or $98. So that could be filled for a swing up to 120, just like what I did with this one. Maybe something to consider. $25 was another strike that I looked at. That buy is at 64 cents or $64 per contract, whereas a sell is at 60. So, a 4-cent difference there. Whereas down here, it's a 10-cent difference and a 10-cent difference here. So it's nice that that spread between those two, the bid and the ask, is not so large. And then going up to the 30, which, has a lot of bullish sentiment here. As we can see, it looks like the open interest in that one, almost 8,000, and the volume traded 56,000 contracts traded on the day. So pretty massive. That goes way above any of these other contracts. But I do think that these are ones to not hold to expiration. But maybe it's of interest to pick up some contracts at 28 cents, as the spread is only 1 cent between the ask and the bid. So, if the trade does go south, there's not much of a difference if one wanted to exit, just 1 cent or $1, per contract. And so with that being said, 28 swing in that, maybe to 40, like I had mentioned. That is not too far up on this chart, but maybe we see a gap up as the market opens or begins to open Monday morning in the pre-market. It's only gone up 1 cent in the after hours, so hopefully price is still around where it's at, as I do think this is a bull flag. I do think it will be respecting 1970 and 1923 as support. But if it does close below that, I'd look for a dip to around 18. But if those do hold, I think it's definitely going up to 22. And with that, either in share price or by capitalizing on premium of those contracts, a lot of money could be made over the course of the next month or so, as I do think it's going to take multiple months to be getting up to, 33 at the top of this channel. And, like I said, with that taking multiple months, I don't think that, basically where the cursor is now, October 18th, I don't think price is going to be up around $30 a share by then. But I definitely think it could be coming up to 22.18. And one thing that I forgot to mention about this, if you see where that cursor is, it does correspond with the bottom over here, right around $22 a share. The low hit on April 22nd was 22.39. And so, that does match up with this 22.18, that potentially being some resistance. So maybe we get a move up there, but then consolidate again, maybe form another bull flag, or maybe we get rejected there and start to pull back, break below these levels, and retrace to the scene of the crime around 18 or, maybe 17.30. That's the 65% retracement from this Fibonacci, which I happened to accidentally leave up there, but I was thinking maybe price could be coming down to 17 if it takes a while going up and then does retrace to the scene of the crime. That downtrending purple line, the neckline, that could be even lower than 18, as time moves on. But, anyways, those are just my thoughts. I hope you found them helpful. And if you did, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys, and trade safe.